Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Thursday. Hopefully everybody's having a GGD, a great green day in the market. You know what? I always wish the best for my viewers and subscribers. And guys, speaking of subscribers, we just hit over 1,000, which is insane. So I'm super excited about that. And welcome if you're new here. So what we do every single weekday, as long as my schedule doesn't flip for work, we go through the overall portfolio value. We go through the metrics, which is the day, week, month, 3 month, etc., and see how the portfolio is performing over those metrics, as well as our buying power, which does go up over the course of the month because we do invest in dividend-paying stocks. So those dividends come in, and plus I put a little free cash now into the portfolio as well, not just dividends. So then we reinvest those dividends and that extra cash that I put in, and then of course that goes into the next set of months. So this is March, so I would be buying either Coca-Cola or Altria with those dividends, and then next month my money would go up. So that's the strategy here that we do, is dividend growth investing for the channel. So buying power sitting at right about $99, but it will be about $100 given the realty income dividend and the Google dividend that we are yet to be paid for this month. So we'll have about $100 sitting in the portfolio. Then we go through the individual stocks and see if there are any deals. So my overall goal for this year is to buy more Apple because I want that to be the biggest position. Now, of course, Visa and Google are also honorable mentions because those I think are two of the higher growth companies that I could own in the entire market. And I do want to have more exposure to those as well. So let's say like Apple is say it's at 235 now, but let's say Visa's at 343 and my average cost is like 350. So if Visa becomes a better deal than Apple, then that month I'll put the money in Visa instead. So I'm not like religiously just gonna keep buying Apple. If there's a better deal within the portfolio, like if Apple's up 1 month when I have the cash and Visa is down, then I'm gonna put the money into Visa. So I try to be pretty strict about when I buy stocks, but if there's a better deal, I'm not gonna just buy Apple at a higher price when there's a better deal within the portfolio, and that does happen. So sometimes, like let's say this month is I'd be buying for the 14710 setup for that set of months. But let's say that like Visa's a better deal or Google's a better deal, I'll buy that set instead. So I generally try to buy next month, but if something's a better deal, I don't get too, tied up in it. So value for today is sitting at $54,844.57. Value is of course going to change because the market is open, but we're down about $350 today, down 0.63%. Then that 1 week mark, we are at $447, about a 1% return. That 1 month mark, we are sitting up $2,700, 5.3% return. Then that 3 month mark, so pretty much since the beginning of the year, we are up $3,400, 6.74%. Then that year to date, we are up almost $5,500 with an 11.12% return. That 1 year mark, we are up nearly 12K with a near 28% return for the past year. And so, guys, we're doing pretty well. I'm not sure. I'm sure the S&P did like 35%, but I'm okay to trail it a little bit because we're not trying to outpace. We have certain companies that I know are not going to outpace the S&P, and that's not necessarily the goal. For me, I want consistent dividend income that will one day supplement my income. So that's the main goal for the channel. Here, give me 1 second. And so overall, the portfolio growth is just a cherry on top. I'm going for dividend growth, but my shares have appreciated over the past year. Then, of course, the all-time metrics. So since I started in April of 2018, so 18, 19, 20, 21, 22, 23, 24, 25, so almost 8 years of dividend investing at this point. Started at 22 and I'm almost 30. We are up $28,804 and about 15 cents, 110% return all time. So buying power again is sitting at $99.74. We will be around $100 by the time the dividends roll in for this month, and we'll see. As of right now, the main goal was to buy more Apple, but if Google, Visa, Coke, or anything drops below my average cost or my buying range, or into my buying range, I will probably be buying a couple of those as well. So since the portfolio today is down, I'm guessing there are probably some deals. So let's take a look and see what companies could be on sale for us or in our buying range. Realty Income is a dividend aristocrat, paid a dividend and increased it for more than 25 years. This is known as the monthly dividend paying company. They even copywrote that phrase because they pay monthly dividends and have grown them for over 25 years. So think of this as almost like a social security stock, essentially. Like, this is one of the most popular dividend paying stocks for retirees because the consistent income, the monthly income. So I'm going to use it for the same purpose. I used to have around 170 shares, but I sold out of this company at a loss for tax loss harvesting purposes, as well as paying off all my debt. So took that out. I shouldn't have to pay any taxes on it because I took a loss for my taxable income. So my taxes will probably be a little bit better this year. Plus, I'm debt free. So now I can actually put extra cash into the portfolio, which then will grow this position and other ones faster as well. So for today, we're sitting at 5 shares. Market value is $286.93. Average cost is 51.75. 0.52% of the portfolio is in Realty Income. Today we're down around $4, about 1.3%. Total we're up $28 with a 10.85% return. Then, of course, as you guys can see, the dividend is always paid by Realty Income on March 14th or the middle of the month, which is kind of nice because it falls right in between my 2 paychecks every month. So usually this pays either a little bit before or right on when my second paycheck hits. So if you were wanting to use this to like stagnate your income, maybe you were low in between checks, you could transfer the dividend out and have some extra cash for the end of the month too. So it is really nice when it does pay. When the payment hits the account. But that is sitting at $1.34 for every single month that pays. So this will definitely push us over that $100 mark for the overall free cash in the portfolio. Next up, we've got Altria. Now, this one is interesting because this is one that I've held for quite a long time, and this stock has been beaten down. Nobody likes big tobacco. People hate the company. It's a poisonous, it's a poisonous product. People hate big tobacco. Kind of like what they do for big oil, too. That a lot of people don't have fond feelings towards oil. But I have 320 shares, 18K worth of market value. Average cost is $47.27, so we're up pretty big now. Almost 33% or a third of the invested dollars in the portfolio are in Altria. Today we're up $100. Total we're up 2,800 with a 19% return. So overall, guys, this has been one of the better performing stocks, which is interesting because it's been a non-mover for like almost 7 years. This is almost year 8. So for a handful of years, this didn't move anywhere. And I think what has happened is the market realized that Juul's not bogging down this company's financials anymore. They finally gotten it off the books. They're no longer associated with it. They're no longer paying off the debt or anything like that. They're completely free from the Juul investment. And the company's still raking in profits. Like, they have the Coca-Cola of cigarettes in Marlboro. So they have a great brand. They have people who are loyal to that brand. They have pricing power with that brand. So whether or not you like the company, they still make money. And so I smoked for a couple of years, and I decided, you know what? If I put money in, I want to get some money out. So now Altria pays me $320 per quarter, which is now, depending on stock price, right? Because, of course, stock prices change. But as of today, I make more in dividends from Altria than Apple has per share. So as of right now, every single quarter that Altria pays me, I will have enough cash from that dividend to buy a share of Apple indefinitely, which is awesome. That's the main goal of the portfolio. Or, I have other options, right? So when Altria pays me that $320, which is the dividend that I got like a couple months ago, right? I could either buy a share of Google. I am almost able to buy a share of Visa with that. I could reinvest it back into itself and buy like 5, almost 6 shares as well. So it gives you freedom, which is the beautiful part. And as of right now, I'm just going to keep putting it back into Apple because that's the company I want to grow, the position I want to build up. But eventually, I could just take that as free cash. So that's really the beauty in dividends, and having that dividend growth is, that is like half of my rent. it'll just keep growing. So the more I add to it, and the higher that the company goes too. Like before, I was sitting like 15K, so or 14K. So it's like we've made almost $3,000 in the company stock price wise, but the dividend is what I'm really after. So that's the beauty of dividend growth investing is you get growth both ways. You get the dividend growth, which is the main point of the portfolio, plus you get the stock. If you pick good companies that grow their earnings over time, the stock price goes up. So that's what's happening here. And this is not the only example of it, but I'm glad that Altria's been doing so well. Next up, we got Coca-Cola, down a little bit today. This is one of my personal favorites. It does not grow very much. I get a lot of flack for it on like Instagram, and if I had a Twitter, I'm sure people would bog me for owning it, but I like the company. And as I say that, I'm drinking a Dr. Pepper product, so I'm going to get bashed in the comments for that too. Yeah. I'm drinking an Orange Crush today. But I have 15 shares of this Dividend King. About $10,050, $10,040 of market value. Average cost is $60.54. Right around 2% of the portfolio is in Coca-Cola. Today we're down $7.28, down about 0.7%. Total we're up $135, up 15% today. So, guys, as of the stock price right now, I'm not purchasing it here. This will be one of the top 5 foundational stocks. I will buy it when it is at a buying range for me. So this is one of those that patience is a virtue. I need to be patient, and eventually it will drop to a price that I want to purchase it at. But this will be one of those that I buy aggressively, and I am setting cash aside specifically to buy. Then we got Apple at $234.82. We have 10 shares, $2,300 worth of market value. Average cost is right around $219 per share, so not up huge here, but I'd still buy it at this price. About 4.3% of the portfolio is in Apple. Eventually that might say 43%. Who knows? I could be a Buffett follower and just make 50% of my portfolio one stock, because that's what Apple was nearly before he sold out of it. Today we're down $7. Total, we're up 160 with a 7.34% return. So guys, this is in a buying range for me. I want Apple to be the single biggest position. As of today, in order for it to be the biggest position, it would need to be about a 20K position. So it's going to take a lot of money, almost like half a year's salary for me to be put into this company. So it'll take a little bit, but eventually we'll get there. And I'm excited to see the appreciation and the dividend growth. Even though it's smaller, I am excited to see how fast Apple makes me a millionaire once I really get rolling with boosting up the share count. Then we've got AbbVie at $210.38, 95 shares, almost 20K worth of market value. Average cost is $95.19, around 36.5%, so almost 37% of the portfolio is in AbbVie. Today we're down $116. Total we're up 10,000, nearly 10,900, but up 120% right now on AbbVie. So guys, this is by far my best tree in the portfolio. This is the one that I want to be able to keep watering it. I want it to keep growing, keep producing fruits for me. It's just at such a high price now that I don't want to purchase it. So I have to find alternative investments, and that's what Apple is. If I could keep putting money into AbbVie, I would totally do it. But at this point, I don't want to pay double the price I don't want to pay double my initial price. So I bought this during an acquisition. It was down. People hated the company. People thought the merger wasn't going to go through, etc. I bought it. I've held it, and I'm glad that I did. Other investors have sold it. And I've even had people in my day-to-day talk to me about how I've made money on this company. Well, I just didn't sell it. Those people were buying and selling and getting out of it. And then eventually, like, how'd you make any money on AbbVie? It's at, X price, and I bought it and I sold it and I didn't make any money. And I'm like, well, if you believe in the company long term, you should own it and hold it, right? Like you're only going to hurt yourself by missing out on those gains. So when you have a good opportunity on a quality company, take it, right? Don't sit on the sidelines. Don't have to, like, you don't want to be on the sidelines saying, I wish I did that, right? And that's exactly what I would have done. If I would have bought like 10 shares of AbbVie, I would have been pissed because I had enough to buy like 80 shares, right? So I would have left a lot of money on the table. Right now, currently, I would have left about $10,000 on the table for AbbVie. Not nearly my Facebook mess up, but it still would have been a pretty big mess up. And it's brought in a lot of growth for the portfolio, and the dividends have grown really nice too. It was $1.07, and now I believe it's like $1.50 something. So, I mean, 40 cents per share over the course of 6-7 years. That's not too bad. Plus, the stock price appreciation has been amazing too. So, this is one of those that I'm glad I listened to my gut and I stuck with it. Even a couple super investors have sold it. Warren Buffett actually sold this company a handful of years ago. And if I would have followed him out of the company at like, I think $115, something like that, I would have missed out on almost almost a doubling, 100% on my money. So I'm glad that I stuck to my guns. I stuck to my gut, and I've made a lot more money because of it. So this is by far the best performing position that I have in the portfolio. And I'm just going to keep letting that grow. Keep letting that appreciate, using the dividends to buy other companies. And who knows? Maybe if it drops, if they have a bad drug release, if they have bad press, maybe I'll be able to buy it at a good position, at a pretty good price, and to add to the position. But as of right now, I'm just gonna let it sit because it's it's doubled my money, and I don't want to buy it at these prices. Next up, we got Visa, which is down almost $10 today. Dang, that's what's dropping the portfolio. So we got 35 shares, $12,000 worth of market value. Average cost is right around $348 per share. 22% of the portfolio is in Visa. Today, we are down $300. Total, we're down $134, down 1%. So, guys, this is a small buying opportunity, but still a buying opportunity. Down $4 a share from where my average cost is at. And it has been up. If you look at the past week, it was all the way up to like 364, 365, and now it's down almost $20. So, good buying opportunity here on Visa. If I had the cash, like if this was my pay week, I would probably be adding to it, but I don't get paid till next week, so I don't want to transfer the money before I have my paycheck in my account, because that's a little more risky than I want to be. But it is a good buying opportunity for me. Then, of course, we got Alphabet. Ticker symbol GOOG. Class C shares at 174.64. Today we are sitting at 6 shares. I did buy one recently. Market value is right around $1,050. Average cost is right around $193. Almost 2% of the portfolio is in Google. Today we're down $1.62. Total, we're down $111, down 9.62%. So as of right now, I'm down about $20 per share on Google. So even though I have like a $5 dip on Visa, Google is still by far the better buy. But if I were to get paid like tomorrow at midnight, I would probably try to transfer over, buy a share of Google and buy a share of Visa. So I'd be putting like $500 into the market. Because as of late, Google's been bashed a lot more and down a lot more than Visa has. So that'd definitely be an opportunity that I'd want to jump into. Don't have the cash right now, but that's why it's always important to have a little bit of cash ready on the side for your specific positions. That way you can pour money in when an opportunity happens, because you don't know when an opportunity is going to happen. Like, Google could jump up to like $250 in a week, and you'd have no control over that, or you have no control over stock price. So it's important to have a little bit of money on the side. Like, my personal savings is where I want it. So I'm thinking about transferring X amount of dollars over every month into my savings account, or I have an investing account too. So I would transfer that over, put it into the investing account, and then just let money sit. My issue that I've learned over the course of investing is I would rather have that money in my investment account instead of the brokerage, because I want to put it into the market. I want to put it into a stock. It's a lot easier for me to keep the money out of the portfolio, out of the brokerage, because I'm very aggressive when I have cash in the portfolio. Like less than 100 to like maybe like $200. It's easier to keep in there because I can't buy very much in the portfolio. Like if I had $200 today, I could buy like, Altria, Coca-Cola. That's it. and Google. So I could buy like a handful of positions if I had that amount of cash. But I feel like I would be more likely to buy O or something like that instead of waiting on Visa. So that's why I keep cash outside of the portfolio as well, specifically geared towards investing. I have an investment account outside of the brokerage so I can pile money up into that and then transfer it over when I see an opportunity. There will be another opportunity on Visa. I'm not missing the boat on it, but I would like to add at these prices. But next up, we got to look at the watch list. So I want to buy Costco. Dang, it's down big today too. I don't know if it says why. 100 $500 a month. Oh, it's probably because the earnings calls today. Stocks usually go up or down depending on how people think the earnings are going to be. So, but dang, like if you owned it, I mean, yesterday, I guess it's not a bad price, but if you owned it like 2 days ago, a week ago, March 3rd, it was at almost 1,060, and now it's at, so you've lost like $30 a share in a week. That's kind of rough. Good buying opportunity that now though, if you owned it at 1,060, or if you owned it at like almost $1,100, this would be a great opportunity to purchase more if you had cash. But yeah, definitely a buy for me right now. I don't have $1,000 to just throw into the stock market right now. But then, of course, we got Berkshire sitting below 500, which is about where I want to buy it. So Berkshire is definitely a buy for me here as well. But with that being said, guys, thank you so much for watching, and welcome to all the new subscribers. Guys, if this is your first portfolio update, hit the like button if you just joined the journey, guys. I've been posting videos on and off. I've had a couple stints where I was like depressed, etc., or like family stuff came up and I didn't post for like a month or two. But I try to be very aggressive and very persistent with the upload. So I'm trying to do 5 videos, long form videos a week of the portfolio updates because I know a lot of people like those, and I've started to do shorts, a couple a day, like a handful a day if I have time after the portfolio update. So I'm trying to push out more content for you guys, trying to be more aggressive with content and be a little bit more real on the shorts. I'm trying to share my journey, share my mistakes, be a little bit more vulnerable than just saying, look, I'm a guy with a $55,000 portfolio. I didn't start that way, So go ahead and check out the shorts, check out other portfolio updates so you guys can kind of see where I came from if you're new here. So thank you so much for watching, and I'll see you guys tomorrow, Friday, with another Robinhood portfolio update. Take care, guys.